Good evening, ladies and gentlemen. Welcome to our weekly investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. We're happy to bring you yet another installment of our weekly uploads. Today we'll be looking at Jamaica Broader Group Limited and Scotia Group Jamaica Limited. We're excited to discuss both of these on our panel today. Most of you recognize my co-host today, Justin Scott, investment banker. Welcome, Justin.
Glad to be here, Dan.
Thanks for joining us, who will also be on our panel. If you're a fan of the content, then don't forget to subscribe. Also hit the bell to stay up to date with the channel. We upload content like this every week. If you want to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Okay, up first, we'll get things started with Justin taking a review at Scotia Group Jamaica Limited. Over to you, Justin.
All right, thanks, Dan. Okay, guys, so we're back again today to review Scotia Group, as Dan just pointed out. And so let's just take a quick look at the financials and assess how they've been doing over the past year. I think Scotia is a great company by several metrics that I'm going to point out now. So the net interest income has increased 41% over the course of the most recent quarter, moving from $6.4 billion to $9 billion. The total operating income moved up 41% from $9.4 to $13.3 billion. And the net profit attributable to shareholders increased 173% from $1.25 billion to $3.4 billion. So that's going to give them a PE ratio of about 7.64 times. It is one of the cheaper main market stocks you'll find right now, especially in the financial sector. I think a real apples-to-apples comparison, you can use it against NCB, which is also pretty low PE-wise, but there's a little bit more to Scotia. So if you were to take a look at the market cap right now based on the current pricing and compare that to shareholders' equity, you realize that it's trading just about at or around its book value. So if you were able to get, let's say, anywhere sub $34, you're pretty much getting this thing for less than it's fundamentally worth. If you're more looking forward to getting something that is plain simple, cut and dry, underneath an undervalued company. Right? So on several metrics, you're looking at the book value, the PE ratio, its growth potential. Scotia is definitely there in terms of the performance. Right now they're sitting at about $604 billion in assets. I did some checks recently and their cash is very, very adequate right now. I know that's a big concern, like everybody's concerned about whether the banks are adequate in terms of their capital, and Scotia is definitely there. Maybe move on to the next slide now. So here on this slide now, when we're reviewing the profit movement over the last 2 years, I'd say they're definitely back over $1.2 billion per quarter. The Q1 seems to be a bit of a weaker quarter for them. However, but then they really start to kick things up into gear heading into the third quarter. They have a little bit of an interesting financial year. I believe they end at October, so their first quarter ends in January. So it's going to look a bit off if you're thinking about it in a calendar sense, but just bear with me, right? So Scotia is definitely here. It's performing. They're really adequate. They very consistent in their profits. Fee income is up. Revenues they get the largest portion nominally from the retail banking. However, insurance actually is their most profitable segment, and they're really digging into further right now. That and commercial banking, and it's really paying off for them. So on the next slide now, we're looking over at the stock price. As you can see, financial stocks in general have been taking a little bit of beating over the last 2 financial years. It's trading down to $34, as I said earlier. But if you're really looking at something that is more straight by the books financially for underneath fair value, then I suggest that you take a look at Scotia Group. Dan, anything to say about Scotia?
Yep. No, I think you're fairly accurate. So at that PE on the first slide, guys, if we could just look back at the PE, it's definitely one of 3 stocks that are trading below 8 times, JMMB and NCB being the other 2. I think NCB is actually relatively cheaper, sub 7 now, which is insane. In the case of all 3 trading relatively low, in the case of Scotia, I bought Scotia for $50 5 years ago. So this is well below its, sort of a 5-year low. Fundamentally, I see it trading back to 10 times, which is the main market average. And so, when you see an NCB or Scotia or JMMB at below 8 times, they're 20 to 30% undervalued relative to the main market average, which is 10 times, and compared to other financial stocks in that space, which are trading at 20 times.
Right.
Burita comes to my mind. And in this case, as you said, trading at book value. So definitely a good buy to have in your portfolio for the medium to long term. Clearly, based on the quarterly results, we can see their profits are back. I do wonder a little bit about the high interest rate regime and the fact that they're benefiting substantially from it.
Right.
It's easy for them to invest all of those, $30 billion of customer deposits in government paper and earn 8, 9, 10%,
Right.
while paying the depositors less than 1%. So I do think some of this pop has to do with that. And as interest rates trend back down in the next 9 to 12 months, you may see that taking away some of the profitability of Scotia. But certainly it's a good buy for the medium to long run. It's a nice conservatively run bank where your money is going to be safe. And so I definitely like Scotia for those reasons. So I agree with you wholeheartedly. Okay, up next, Jamaica Broilers Group. And now we covered this one 2 weeks ago when we had Chris Levy in studio,
Right.
Justin, and we went over the half-year results at that time, which were stellar. And I charged him with the need to come back with profits and maintain at least $1 billion of profitability per quarter. And here we are seeing the third quarter results coming out 9 months to January 2023. And spoiler alert, they did $1.4 billion for the third quarter. But just doing a deeper dive on the numbers for the 9-month period, we see revenues up by 27% to $68.5 billion, with 64% of those revenues coming from Jamaica and 36% coming from the U.S. They've now exited Haiti, so we won't be discussing Haiti going forward. We see the gross profit up to $6.8 billion. That's a 97% increase, with the substantial growth and profitability coming again from Jamaica, where their results were up by 53%. So a lot of that drive coming from Jamaica, and we've been told the Jamaican market is booming with tourism back, and so that's helping with the push in growth in revenues and in profitability. But North America close behind, now making up, as I said before, about 36% of the revenues and 34% of the profit. We see the profit before taxation growing to $5.5 billion, 109% increase. There was a $1 billion loss from discontinued operations, and that results in net profit attributable to shareholders of $3.5 billion, 73% better than last year. But again, there's $1.1 billion of loss associated with exiting Haiti. That's being booked in that, and so that's going to go away in future periods. One more quarter to go in this financial year, and then we won't be talking about that loss from discontinued operations going forward. When you put that all together, we're looking at 9 times PE, again, in a market where the main market average is 10 times, so obviously trading at a discount. And then this PE is after adjusting for the $1.1 billion loss. So if we want to put this into perspective, and I want to think of 10 times PE as being fair value, and we look at what they did for the quarter, $1.4 billion profit, or even what they did for the 9-month period when you take out the $1 billion of discontinued operations, which is about $4.5 billion, and you annualize either the two of them, you're going to get an EPS of between $5.92 and $5.97 for a full year annualized, which means that 10 times I see the stock being fairly valued at $59 to $60. So, it's coming. Wait for it, folks. You're going to see it. We're going to come back in 6, 9, 12 months, and you're going to see the stock certainly north of $50. Solid balance sheet. Let's look at the total assets growing to $70 billion. That's up by 27%. Shareholders' equity up to $24.5 billion. That's up 18%. They're carrying a reasonable amount of debt, net debt of about $28 billion. So their leverage is about 53%. But they're generating pretty strong EBITDA, about $8 billion of EBITDA. So when you think of the debt in that context, it's probably only 3 times, EBITDA. So I think they have a fair amount of debt. Business is still throwing off good cash, still growing. They've got about $4-5 billion extra inventories and biological assets carrying as a result of logistical challenges. I expect to see inventory levels coming down in the future as the sales have ramped up and they continue to move away from that, carrying that extra inventories and biological assets. In the last year, they did $70 million birds in sales. and over 30 million dozen eggs, as in hatchery eggs. So the business is back to pre-COVID levels in terms of their production and performance, which is remarkable. Next slide shows the growth and profitability in the last 5 quarters, and you can see really good performance in the last 5 quarters running, with this breakout quarter of $1.4 billion after they've resolved the charge associated with the Haiti, exiting Haiti. So $1.48 billion to be exact performance in the most recent quarter, the best performance ever in the history of Jamaica Broilers Group. And I think, better is yet to come. Still a lot of room for growth in North American potential. Still room for growth in Jamaica as tourism grows. We've seen sales were affected during the pandemic, mainly because of what happened to tourism in Jamaica. And we can see tourism is booming, and over 4,000 hotel rooms under construction, another 4,000 queued to start. So maybe 8,000 rooms coming in the next 5 years, which has the potential, by my math, to grow the revenues of broilers by an additional 15 to 20%. So good potential there. Looking at the stock price, we can see stock prices being up and down, up and down. Has had a high of about $36, $38 in recent times, now down to $33. Again, I think this stock is going to be fairly valid at around about $50 and likely to trend up to $60 if they can do $1.4 billion a quarter, $50 if they can do $1 billion a quarter consistently. So great legs in this stock, a good buy at 9 times PE with the results that have just come out and the growth potential of the business going forward. Definitely one for the large pension funds to bank on, because this is a solid manufacturing company that's bringing foreign exchange to Jamaica, doing a great job. There's a lot of debate about, should we be producing chicken or only importing chicken? Well, this creates significant jobs in Jamaica. Agricultural sector on a whole creates substantial employment, and it's great to see somebody playing in that manufacturing agricultural space that's very profitable and creating jobs and earning foreign exchange for Jamaica. I don't know what more you could ask for, so you can tell I'm really excited, but for perhaps a more objective view, Justin, what are your thoughts on JBG?
All right, sure, no problem. I think you took off half the talking points I planned to speak on, but I have so many more to go with, right? So let's even start at the slide we're in currently. So if you're looking at the price from where Jamaica Brothers would have been at this time last year, the price is almost up about 50% over the course of the last 12 months, right? However, the PE is still underneath 10 times. So you're telling me in the last year, the price appreciated almost 50% and it's still undervalued, right? So it's trading here at its 52-week high, which was about like $39 thereabouts. And there's still a lot more to go because a lot of signs are pointing towards broilers. So that I was speaking earlier about the increase in the rooms for tourism, because you do have to feed them. And so we're having a lot more people coming to Jamaica. We're having a lot more people coming here for the events, tourism, things like that. There are a lot of things coming up, and you have to provide food for them, right? But let's look at it from another angle. Currently in the US, they're having egg shortage. So the bird flu has been affecting a lot of the chickens that they have out in the US, to a tune of about 57 million birds. Jamaica Brothers currently has about 11 million birds currently right now in terms of biological assets. They have about 8 million, I think that was the number quoted last time we were on the forum, about 8 million in terms of eggs. So when these eggs hatch now, because they're the largest commercial egg producer for hatching in the hemisphere, as a matter of fact.
Correct.
So when that happens now, they're going to be the ones that people are looking forward to provide them with layers, to provide them with all of these other birds to ensure that everything is correct. So I think you're going to be seeing a lot more growth coming from the North American side of things coming up this year. So right now they're already in about 36% of the revenues. But even further from that, if I was to put some expectations for next year, even further from that, if we should take things back to Jamaica, we're looking at most recently in the budget debates, Nigel Clark announced that they're going to be removing the GCT on the importation of small rumination animals, right? Well, those animals have to eat something too. And Jamaica Broilers produces some of the feed for all of those animals that GC has been removed on. So when you're a farmer and you realize that it's a whole lot cheaper right now to import to import these animals, it's going to be a lot easier for you to bring them in, and you're going to have to be buying more feed, which is even more points for Jamaica broilers. So there's a lot of things going on towards them. I think they're looking great going forward, and I'm expecting great things from them by this time next year.
Absolutely. I couldn't agree more. We look forward to hearing bigger and better things from broilers. And I do think also, Scotia has some good legs in it. Again, I bought at $52 5 years ago. And I'm hoping that the stock will get back to $50 within the next, year or so. So we look forward to see how that develops. And we think the financial market's just doing tremendously well. It was great to hear the budget from my perspective because, no surprises really. And as far as, my expectations are concerned, we will see inflation checking in Jamaica in the next 6 months. And we know there's a small recession coming from the U.S., but I think we're going to weather that storm pretty well. And I think the second half of this year is going to be, magical for the stock market. So I'm really excited to see how things develop.
This is definitely where we need institutions to really step in and start to show their prowess, right?
Yeah. Now's the time to buy.
Now is the time.
Now is the time to buy. If you wait 6 months from now, I think the market will have moved up by about 20% on average. So it's a good time to be out there buying. That's it for today's discussions. I'd like to thank our viewers for tuning in. Your support is always appreciated. Big thanks to Justin for his usual insights and support on the panel. If you're curious about updates for our virtual forum going forward, then find us on social media. We share our live stream dates and our upcoming guests on our official social media pages. So give us a follow and stay on top of all things forum related. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, folks, and remember, wise investors, slow and steady wins the race.